I'm trying to remember what the all-time high in the S&P was, but I think it was like around 4,800. So my question is
little more than 4,800.
Okay, if this current rally were to exceed that, would that negate a bear market?
Yes.
And would we have to sort of start? Yes, it would. Okay, so we'd have to switch terminology.
But okay, now let me throw a curveball at you. We're not actually in a bear market.
Okay, explain.
Okay, so first of all, we have to go back and say, what is a bear market, right? And so let's classify what a bull market is. And I think you'll agree with the statement. A bull market in equity prices is when prices are rising over an extended period of time. In other words, there's a rising trend of prices over a sustained period of time. You would agree that that is a bull market?
Yeah.
Okay. Then by that logic, we should acknowledge that a bear market is when the trend of prices is declining over a long period of time, or at least a sustained period of time, right?
Yeah,
so in other words,
I'm sure there are economists that have more detailed, specific definitions of both, but yes, common sense wise, those make sense.
Okay, because I mean, what we're talking about is a bear market is when the previous trend of bullish prices has been broken, and now prices are trending negatively, right? Yeah. This is really and if you go back and look at the dot-com crash, we had a trending rising bull market in 1995 to 2000. We broke that rising trend line and prices declined through 2002. 2007, 2008, we had a rising trend of prices from 2003 to 2007. We broke that rising trend line, and then prices declined negatively through the bear market in 2008. So by that definition, right? So now the media wants to throw around this arbitrary definition of, say, 20% decline in the market, that's a bear market. Well, that's only if that 20% decline has negated the previous bullish trend in prices. We have not done that. You can draw a trend line in this market going back to 2009 to present, and we are nowhere near violating that bullish trend in the markets. So technically, we're in a correction. So now this is why what you asked me is so important. What distinguishes a correction from a bear market? A correction is when you have a decline in prices that quickly recovers, sets new highs, and it keeps going, right? That's 2015, 2016. That's 2018, right? We have the markets come down, they immediately reverse, you get back into a positive trend, it's all good. We had a correction in prices. So by that definition, if this market comes down 18, 19%, I mean, we briefly broached 20% decline in the S&P, immediately reverses and goes back to a bull market. This was a correction. It wasn't a bear market. It may have felt like a bear market, may have looked like a bear market, may have smelled like one, but you never violated the bullish trend in stock prices. Now, I know it's hard for people to wrap their heads around, but you've got to have roughly a 40% decline in stock prices right now just to violate that bullish trend from 2009. That's how deviated we are from long-term trends.
Right. And it shows the magnitude of this last bull market run, which was one of the biggest and longest in history, right? And
exactly.
As you and I have talked about, largely fed with a lot of, additional stimulus and artificial juicing from the Fed and other central banks, and near the end there, fiscal spending as well. Okay. So
just to wrap up your point, though, the important part of what you said is that if this market turns around and rallies back to new highs, bear market's over. Correction is over. It's actually a correction, but it'll be over and we'll be back. You need to be 100% long stocks and riding the next wave, whatever it is.
All right. At least from a technical standpoint, I have trouble finding the fundamental cause for that, but but I agree that if we're there, we have to respect what the tape is saying.
Respect for what it is. Yeah.
If you enjoyed this video clip, click here to watch another one you should like.